Good morning. Oh, no, it's afternoon. Sorry. Good afternoon, everyone. Thanks so much for joining us today. My name is Helen Avery. I head up nature programs at the Green Finance Institute. And thanks for joining us for this brief run through and reflections on what next for nature-related risk in the UK. And specifically today, we're going to be talking about the analysis that was released a few weeks ago that showed what the GDP impact would be for the UK born of nature degradation, both domestically and internationally, and also the impact on the financial sector. So I'm joined today by an amazing panel, and I'll just let you know who they are before we get going. So I'm joined by Richard Benwell. He's the Chief Executive of Wildlife at Countryside Link. Billy Swede, who's Head of Climate Risk at Barclays. David Croft, Global Head of Sustainability at Reckitt. And TNFD early adopter, and Dr. Nicola Ranger, who leads the Resilience and Development Group at the Environmental Change Institute, and is also director of the Resilient Planet Finance Lab at Oxford University, who was a leading part of the technical team behind the analysis. So in terms of the format for today, we are going to, Nicola's going to give us just a brief run through of the analysis and the takeaways, just as a bit of a refresh, as it's been a while since the analysis was released. And then we're going to have a discussion with our panelists about their sort of reflections, and also what are the key steps that we need to take collectively, whether it's the finance sector, corporate sector, NGOs, and also we'll touch on government. So we'll have that discussion, and then we'd really like to open it up to questions to you. So hopefully we'll leave about 15 minutes to take your questions, and then those we can't get to, we'll definitely take away, and we can support on questions we couldn't answer later. So all the usual ways that you can submit your questions through the Q&A. I think we all know this by now, and or I'll keep an eye on the chat, but if you could direct your questions through the Q&A little app thing, that would be really great. So with that, keen to get going. I know there's quite a few people signed up for today. We are recording it, just so you know, everyone, and we will publish it on the GFI site afterwards, but I'll share that at the end. So with that, I'm going to hand over to Nicola, who's going to walk us through those key updates and the summary of the analysis. Thanks.
Thank you so much, Helen, and it's a real honour to be able to present this on behalf of the team today. So I'm just going to very quickly go through the high-level findings just to help frame the discussion afterwards. Now, as a starting point, why did we do this analysis? So this was the first sort of full nature-related stress test of a G20 economy, the UK. And what we wanted to do is look at to what extent does nature degradation, loss of biodiversity, erosion of ecosystem services actually pose a material financial risk to the UK, with potential impacts on financial stability and also on the wider macroeconomy. So that was the critical exam question that we were set. And the context for this is that the UK is actually one of the most nature depleted countries in the world. We've not met a number of our international targets. Our Office of Environmental Protection has pointed out that our environmental targets are not adequate. So we have quite a long way to go. But to what extent is this actually now creating a financial risk to us? So this was really a first of its kind analysis, brought together a very big team, including those institutions at the bottom there you'll see on the logos, but also wider institutions as well. And we looked at a number of building blocks that were, so looking at what are the key risks to the UK, so generating a nature-related risk inventory. We provided the first value at risk, so previous studies have looked just at the dependency of an economy on nature. We then translate that into a financial risk, and then look at scenarios and the impact of those scenarios on the macroeconomy and also on UK banks. Importantly, another new part of this analysis is we look not just at the domestic risks, so the impacts of nature-related damages in the UK, but also the exposure of the UK's economy and the risks that we face due to those ecosystem erosion overseas as well through our supply chains and our financial exposures overseas. And the key result that we find is that indeed these nature-related financial risks are material, and particularly that they compound with climate-related risks, and that can actually double the impacts of climate-related risks. Go to the next slide, please. Next slide. Great. So the key takeaways in brief then. Firstly, we looked at the scenario analysis and looked at the macroeconomic impacts of 3 key scenarios for the UK. And what we show is that in the next decade, we could see declines in UK GDP versus the baseline of up to around 12%. So that's the first result. The second result we find is that these nature-related risks are around the same size as climate risks. And that's really important because they are actually very, very interlinked. And so, as I said previously, we can see a sort of doubling of the risks, particularly on the physical risk side. We also find that half of these risks to the UK's economy are coming from overseas, so through our supply chains and financial disclosures. Now, in the analysis, we look both at the chronic risks and acute risks. So chronic risks being those gradual year-to-year changes due to, for example, decline in ecosystem health, so soil health, changes in water extraction, versus areas like acute risks. So, for example, what we call a multiple breadbasket failure. So this is where multiple food systems around the world are impacted. And we find that the impact of these year-to-year changes can be as big as these acute changes. So these are the real events that are happening right now, eroding UK output. We then look at what are the impacts on banks, so the 7 largest UK banks, and we find conservatively, so we this is, you know, do interpret these values with caution, is that up to around 4 to 5% of the value of portfolios of the domestic holdings of these banks could be impacted due to nature alone. What we find is that the compounding effect of climate can even be even more. And then finally, we find that the agricultural sector is most at risk in percentage terms, but actually the largest risks in absolute economic terms are to the services and manufacturing sectors. And this is particularly due to their exposure to international supply chains. Go to the next slide, please. So the analysis that we did was very comprehensive and wide-ranging. This figure sort of shows the flow of the analysis. I won't go through it in detail, but just to pick out a few key points. So the first point is that everything started with a nature-related risk inventory. So we looked at a very comprehensive view for the UK of what are the key nature-related risks. And this was similar, for example, to how the Cabinet Office assesses risks as part of the National Risk Inventory, the National Risk Register. So that was the first starting point. We then took a risk-based approach and looked at the value at risk, but a forward-looking value at risk for different sectors, both on the physical risk side and then also transition risk exposures as well. And that led to a metric which we call the nature-related value at risk, which then we look at for different portfolios. So that was the second component. And then the third component was a scenario-based analysis. So a set of what-if scenarios, which we applied to the UK economy and then to the financial sector to look at what are the impacts on GDP and how does that impact on the value of bank portfolios. Next slide, please. So this is the first result, which is the UK's nature-related risk inventory. So you can see here, I do sort of point you to the report to look in more detail, but we pick up 29 different key risks to the UK economy, everything from increasing flood risk due to changes in land use, to changes in food supplies, to health risks. And what you can see is we map this out in a very similar way to the way that the UK assesses risks in its national risk register. So impact versus likelihood. And in that top box of highest impact and highest likelihood, you see risks around global food security implications and the impacts that has on global stability, but then also in particular the health related impacts. So antimicrobial resistance, which can increase the risk to livestock, but also humans from pandemics. And that pandemic risk comes out very strongly in this as well. And you also see in there soil health decline being one of the key risks. But there's lots of other risks in there as well that are really important. And importantly, few of these risks are included at the moment in the UK's National Risk Register. So we really see that nature is sort of falling through the cracks somewhat in terms of how we think about risk. Go to the next slide, please. So what we do as the first part of the analysis is we look at this nature-related value at risk. And what we can see across sectors and across different ecosystem services is hundreds of billions of pounds at risk every year due to nature-related risks. And the biggest risks that you can see that come up here are particularly related to water and particularly related to climate regulation. Go to the next slide, please. Now we apply that to the bank's portfolios and we can see where are those risks actually hitting banks and where are they coming from globally. So a lot of these risks, as I said, are coming from overseas, and particularly the big international banks. You can see a lot of these risks coming from Asia, Latin America, the US, other parts of Europe, for example. Go to the next slide, please. So then the final part of the analysis is the scenario analysis. We look at 3 scenarios. The first is the domestic scenario. So these are sort of domestic related risks in the UK. We look just both at the direct risk, but also the indirect risks as well. If you go to the next slide, then we look at assuming everything's okay in the UK and looking at how much risk is imported from overseas or exposed to from overseas. This sort of shows the complexity of the scenario analysis that we put together to enable us to do that. If we go to the next scenario, then the final scenario is then looking at the pandemics. So let's jump to the final results then. So what do we find is we find that these nature-related risks are macro critical. So we can see big impacts on GDP. If you go back one slide, so we can see GDP impacts of, as I said, up to 12% or more in the pandemic case and around 6% in the other cases. And on the right-hand side here, importantly, you can see the compounding effect of climate change in orange. And so you can see here that this is actually acting as a risk amplifier on climate risks, and in some cases actually doubling those risks. And then the final set of slides then is then looking at what are the impacts on banks. Again, this is conservative because we don't look at the compounding of climate risks as well, but you can see very strong impacts on portfolios, particularly in the agricultural sector, but also electricity, manufacturing as well. And I'll finish there. Thank you very much.
Thank you so much, Nico. I know that was a very quick run through what is a very, very lengthy piece of and detailed piece of analysis, and we'll put the link up to where you can access the full analysis in a moment if you haven't already. I'm assuming as you're here you probably have. So I'd love to sort of open this up then for sort of reflections before we go to Q&A. So Billy, coming to you first, obviously representing for us here, the finance sector. I would love to hear your reflections on the analysis, and also as your head of climate risk, do you think that the case is being made that nature loss and impact are as important to capture within risk management as climate change?
Thanks, Helen, and thanks, Nicola, for the run through. I mean, let me start with the punchline. This analysis is very helpful. It's very interesting, and it really will help us in our building, in how we build our understanding of nature related risk. To take a little bit of a detour, so clearly as a bank, we today have an element of an existing practice, level of practice, if you will, around climate. We have a series of policies in place, in particular around forestry and agriculture. We've been doing environmental due diligence for some time. We also have more recently, with the TNFD, started to do things like a heat map and a pilot around our impact, risk, and opportunities. But clearly, we have much more work to do in putting us in a position where we can have a comprehensive understanding and response, if you will, to this. What is really powerful, I think, with the analysis is it translates nature degradation into an economic impact. So first, it gives this order of magnitude, and I noted the health warning, from Nicola on the level of precision there, but it does give us an order of magnitude. Nicola talked about how this compares, nature and climate, and the fact that they are about the same level of materiality. But also, if you take a step back out of nature and climate, and look at the GDP significance of this, you're talking about a kind of impact which is somewhere between a global financial crisis like the one we've had in 2008 and the early and the pandemic, especially the early onset of the pandemic. So it does make the case for the materiality of this. It then allows us to run our portfolio of financing through such a scenario and to start exploring the financial impact, the financial materiality of the risk. And that's really what the paper brings. We actually in the process of doing just that, using the work from Nicolas and the team, and try to use that to inform our own exploration for a subset of our portfolio. We'll have to take the time to digest what it means. Clearly, we were one of the 6 banks or 7 banks highlighted by Nicolas in her paper. We now have to take do our own work, if you will, on that. To conclude, maybe here on my response, Helen, there's probably a couple of things that I would point out. So first of all, I think that element of what is systemic risk compared to what is specific risk is clearly a topic of importance for banks and for financial players. There is a general risk vulnerability, if you will, in the sense of the kind of the systemic risk, but also understanding the specifics of the portfolio. That element of regional versus international, clearly a bank like us, we are very large in Europe and also very large in the US, and we have presence in Asia. So those interplay there on the domestic impact, but as well the impact via supply chain, and potentially thinking also about the domestic impact into the other geographies where we operate over time, not the UK being a starting point. And also the importance of then building on this work to understand what are the real world outcomes that we like to see into the economy, broken down, sector by sector, that will then help us organize and improve and further our practice there.
And just on this last point, when you mentioning the real economy sort of sector by sector, sorry, the real world outcome sector by sector, is that like what we would hope for nature positive pathways by sector? I just wondered if you could clarify what you're thinking there.
Yes, exactly. If I try to compare with climate, okay, so on climate, we had IPCC, I think, created 1988. Then we have a lot of work from economists in order to help understand the economic impact of the state of the climate system. And then more recently, we have developed a practice to take those economic impact and to translate them at the level of a financial portfolio. Things like stress testing, things like done through the NGFS, for example. And importantly, we also have a series of reference publication, thinking things like the International Energy Agency scenarios, the net zero scenario, for example, that breaks down the various sectors of the economy that are relevant and try to describe in technical terms, based on the engineering nature of those sectors, what a transition pathway looks like for each of those sectors. So that once you add it up for the economy, if you want to mitigate the economy, what does it mean? And it's very different in the cement sector, the steel sector, the transportation sector, etc., etc. Now, if I draw the parallel with where we are at in nature, we had the IPBES, so that was set up, I think, 2012. Now we're starting through this work that we're discussing here today to start seeing the economic impact of that. And we started now to do the exploration on translating that into a financial impact for us. But having that equivalent of an International Energy Agency scenario, if you build up the economy, those are the changes that would be positive changes in such and such sector, and how together they can add up to a concept of stopping the degradation and potentially, going into net positive. That's the kind of things I was talking about, Helen, when I mentioned outcomes.
That's really helpful. Thank you. So, and I'll come back to you at the sort of end after we've gone round the panel, Billy, just to sort of say if there's one thing we need to, or one or two things to sort of move this forward to make life easier for you as a looking at potentially nature risk within the bank. We'll come back to you on that for sort of recommendations for next steps. So David, coming to you now, thank you so much for joining us. So Reckitt is an early adopter of TNFD. You're catching nature-related risks as part of that. And if you're not familiar with Reckitt, if you're watching, Reckitt is responsible for brands like Durex, Nurofen, what else am I, Dettol, what else am I forgetting here, David?
Or Finish, Vanish, Lysol, the list goes on and on, don't worry.
So I guess what I'd like to know is what part of the reason we put this we managed to bring this amazing technical team together and develop the analysis was that we weren't seeing companies sort of moving on nature. The finance sector actually seemed to move before actual corporates did. And I think we're still seeing that. And that is causing some tension. Obviously, the finance sector wants to invest and put money to work, but there is sort of this slow pace of change in companies. I don't know if you agree with that, but I'd be keen to sort of hear what was it that encouraged you at Reckitt to make that move, and then also, does this sort of automatically translate into money being mobilized into nature restoration at the level of Reckitt and other companies?
I think our starting point for this, and just thinking about the brands you just mentioned, and I added too, people will perhaps think, oh, Reckitt can't have that much of a dependency on nature. The truth of the matter is, our largest single ingredient is water, and if you take a brand like Durex, we are dependent upon rubber farmers in Southeast Asia and their trees, and so when you start to break it down, you begin to recognize the need to think about how climate and nature are really core to some of our biggest brands and our business overall. And I think overarching within that is as a whole, as a society, we haven't valued nature. We haven't put it at the heart of some of those strategic conversations that now we see more of this threat coming through because of climate change, not only because of climate change, but because of activity overall, but climate change is really magnifying it, and very, very quickly magnifying it. We have not factored in that dependency and how you might work to protect and build resilience. And oftentimes we think in Reckitt about risk, resilience and opportunity. And the latter two are probably more motivating because they start to create a stronger position, maybe even competitive advantage, but that one that is ripped through the whole value chain. For us to build that, we have to understand the impacts, we have to understand the origins of the raw materials that we're using, and we have to be more vertically engaged with those suppliers. In our case, if I take latex and smallholder rubber farmers in Thailand as the example, it also linked back to a real clear understanding about the challenges that small farmers face. The fact that because latex is pegged to the price of oil, because a lot of latex, natural latex, goes into the car tire industry, which is also using a lot of synthetic rubber from the oil sector, the price for natural latex was quite depressed. And we realized that farmers were not investing in their farms, which wasn't good for our supply network or the quality that we wanted, but also they were not going to invest in maintaining those farms and thinking about the nature side of this conversation at the same time. So we began a process, first of all, to work more closely with them and pay a premium through the Fair Rubber Association to understand that and help them make certain they have a reasonable livelihood. But then we also began to look at agronomy and biodiversity impact metrics, which we've developed with partnerships at Nature-Based Insights at the University of Oxford, so that we can really understand what are the environmental, climate, biodiversity and economic factors at work within that supply chain, so that we can then start to build resilience. And that gives us a much stronger supply chain, more of the high quality latex that we need for the biggest global condom brand. not many sectors have got to that stage, I think. Even when I was reading the newspapers over the weekend, the focus has been about how we grow food through farms in the UK. Critical, no doubt about it. But continuing to perhaps doing that in a way that doesn't value soil health and the nature and biodiversity that supports those farms is in the end a downward spiral. And that's why I go back to what I was saying at the outset. What we need to progressively do is to bring nature more into the core of business strategy so that we build resilience and actually we think about how we want to strengthen nature as part of strengthening our overall value chains and our business outputs. Now, last time I looked, the gap on climate and nature was something like £700 million of funding per year. And we think, gosh, that's not going to happen very easily. And there's enough things that business is investing in overall. But when you start to think about the dependency, and Nicola's report makes this very clear, if you're not taking some of that into account and starting to act, then you're going to start to struggle to maintain economic output. Now, businesses, as we all know, are perhaps more motivated by opportunity. If you flip it the other way around, WEF, World Economic Forum, talk about $10.1 trillion of funding of opportunity that might be available from 2030 onwards if we are better valuing nature and reinvesting in it. And that's, something where we also need to join up because it is a landscape level conversation and Reckitt isn't the only player in any landscape. And it is also about joining up on metrics. And this is where TNFD and the work that we and others have been doing on how do you measure biodiversity impact and therefore also remediation becomes critically important. The best example I can give you on how to join up is water catchment areas. We've been doing work in India and in other countries about how we contribute towards better water capture in an overall water catchment area, because we're dependent upon that water, but so are many others. And so in India, we work with civil society, we work with local government at a town and state level to help generate catchment-based activity that means everybody benefits and more people then join in progressively. And actually, in the report, I think it's really interesting to see how some of this approach for being really clear and joining up about where those risks are actually going to be focused, and therefore through a national risk register, you start to see elements of joint dependency, because it's not going to have the work on that catchment area I just described doesn't work if Reckitt's the only player in it. It works if dozens, hundreds of people are involved in it with a coordinating organisation approach. And this is what I see coming through this report as well. Yes, we can start to identify and quantify the risks, but we can also from that start to identify areas for collaborative, not just private sector, but public and private sector joint approaches, coordinated approaches to build resilience and reinvest in nature that we all then benefit from.
Brilliant. Thanks, David. And so I'll come to you in a moment then after we've spoken with Richard, sort of really to ask you, what's the one or two things we can do to actually motivate companies? So thank you very much for sharing that. And so Richard, over to you. Thank you so much for joining us. So Wildlife Countryside Link represents over 80 environmental and wildlife coalitions, I believe, or NGOs. So I'm just really keen to understand what are the reflections you're seeing from that community, and how do we better make sort of that connection between economic growth and nature restoration? I think we've tried to over the years. The nature restoration sector has been very much about, well, we all love nature, why would we protect it? Do you think as we move, try a different angle and show, well, actually, it's about our economy, that's going to help? I mean, what do you think, especially with an upcoming election?
Thanks so much, Helen, and thanks again for brilliant reflections so far. I think it'll never be an either or, nor should it be, Helen, in that question about whether we take a nature first approach or use things like the economy as a lens to get into why we should protect nature. And it's worth saying at the outset that there will always be some of those in our community who are uncomfortable with talking about nature in a financial or economic perspective, at all. And I completely sympathize with that perspective. Protecting nature for its own sake is exactly the right thing to do, and millions of people would do that regardless of what it meant for the economy. But the call to use an economic framing to demonstrate the fundamental importance of nature recovery for our collective future is stronger than ever. And I think there is a huge appetite from our sector to use the brilliant work that you've done to try to leverage more action from government. And what you've done so brilliantly is to put that, as Billy said, order of magnitude on the effects. For a long time, we've said that the future of the economy depends on nature. If I had a pound for every time we've used the word underpins to describe that fundamental relationship between nature and natural assets and the future of our economy, I would be a very rich person. But now we've got a sense of just how big that impact could be. And I guess the question for us as a sector is how we go on to use that in a way that can create action that's proportionate with the scale of the impact that you've uncovered. When we saw the Dasgupta review come through, there was a similar moment of huge attention. Everybody saying, this is what it's about. The economy depends on nature. But what I don't think we've cracked yet is talking about what we should do about it if we really believe it. Too often we see these big dramatic conclusions about that relationship between the economy and nature, or between health and nature. And we go back to type straight afterwards and we say the economy depends fundamentally on nature, so we should be improving the hedgerow regulations to protect 1.5 meters, not a meter, or so we should increase funding by 10 million pounds a year, or so we should think about how we strengthen the protection of the meager tiny bit of the country that we already protect for nature. I guess where we are at the moment in Wildlife and Countryside Think is saying that if we really believe this, if we really think that 12% of our future prosperity is potentially at stake because of degradation of nature, what scale of intervention does that behove us to take? And that means moving beyond the sort of level of ambition we've seen before, which has been brilliantly focused on protecting protected sites, and it's been looking at DEFRA to look at those critical natural assets that we've already got, but it hasn't really spoken at the level of change that we saw after the Climate Change Act came on the climate change side to describe the same level of transformation that we'd need for nature. Now we've got that same set of targets, legally binding targets for nature that we got for climate change first in 2008. And what we need is the same level of ambition in the response as we saw in things like electricity market reform, where the government was talking about tens of billions of pounds being unlocked to drive climate change action and the renewables revolution, and describing with appetite and verve the amount of potential wins that you would get from doing that, and the sorts of tools that were being considered at that stage for climate far outstrip what we're talking about on the nature side at the moment. Things like contracts for difference and feed-in tariffs. You knew then that you were likely to be paying above the odds for each extra unit of gain that you got from renewables, but it was about driving transition at pace and scale, creating winners, creating excitement. Here on the nature side, we're still labouring under public subsidies that just about pay the costs of the intervention involved in things like the farming budget. And we're still thinking in the order of just a couple of £billion a year to help finance that 70% of our green infrastructure. You saw on the climate side, serious targets being passed down from that overarching national target to responsible polluters. And that for me is really, really key. It says this isn't about government responsibility alone. It's about identifying those polluters and not just asking them nicely to change, but creating compliance markets that can drive investment at scale and turn these things into boardroom issues, not just CSR issues. And on the nature side, we've got a tiny hint that that might be coming with things like nutrient neutrality and net gain. But let's face it, those are tiny weeny offset markets for a tiny portion of the environmental harm that the private sector drives. They're nothing like the kind of compliance markets at scale that we would need to fill the finance gap that you guys identified in your previous landmark report that was whatever it was, 4 or 5 billion quid a year. So after that first part about public investment and incentives for change, regulation to drive private sector change seems the sort of scale of intervention that we need to be talking about. And of course, you know, I hear David rightly saying that, you know, we don't know the metrics in detail for each sector. Of course we don't. But at the moment, there's no conversation about what that sort of regulatory framework would look like and the scale of effort that would be needed, let alone the details of the metrics. And surely we can conceive of a world where you can use proxies to get you started. How much of your supply chain is in wildlife-friendly farming, for example, to create bands of effort for investment to get us going before we can get to the serious detailed metrics. And the third bit, that if we really believe this stuff, we ought to be seeing is around the way that government itself talks about investment in nature and reports on success. We've started to get to see a governance framework to report on nature restoration, but really it's still a DEFRA deal. We have reporting on our Environment Act targets, and we have the OEP to drive change. But have we yet started to seriously think of natural assets as critical national infrastructure, critical natural infrastructure, in a way that would get us to look at the investment need to maintain and enhance those assets as we would do for energy infrastructure or water infrastructure? No, we sort of vaguely hope that those natural assets will continue to deliver their services without any sort of objective look at the scale of investment needed to maintain and improve the asset. And we still continue to report on economic strength on the basis of old-fashioned GDP rather than thinking about environmental assets and their condition. So there's a change in the way that government ought to talk about its environmental record as well. And I'll just wrap up, Helen, by saying that if we believe what we've got on the page here about that scale of difference that nature degradation could make to our economy, then it's not just about nagging government to do those things. It's about us asking for those things in a way that shows that we have faith in that number. It's about what the nature organizations say, but it's also about joining up with you guys in the private sector and in the finance sector, because if you seriously believe that too, then the sort of message we want to give to government is that you're also calling for the kind of reporting, the kind of nature positive planning, and the kind of sensible compliance-based regulation that would be needed to drive the investment at scale, so that we're not just managing the decline of these assets, but really thinking about how we do public investment, public reporting, and private investment in a way that would add up to change at that 12% sort of scale.
Thank you so much, Richard. Always inspiring and so many great recommendations there. It's worth mentioning that if you are living in the UK and can make it down to London, there is a march being organised, isn't there, for nature on the 22nd of June. Look it up. I don't know the link, but we'll try and get that up for you. I think it's Restore Nature. I'm not sure, but I know you're involved in it, Richard. So come along and make your demands, make your requests. But David, I can see you nodding along here. We're just going to do a quick wrap up. I'd love to sort of hear your quick reflections, Billy and David, and then we'll come to you, Nicola. And then I can see lots of questions have come in. And Nicola, I think you've been answering some of them already. But any quick reflections, and, you know, if there are a couple of things you would call for as like practical next steps, so we can stop just talking about this forever and ever, economic growth and nature is out here, but actually move things forward through you know, into the real economy. What would they be? So David, to you first, just your reflections and thoughts.
I think the starting point is think about TNFD as a framework or a similar framework, and how you can then think about dependencies. We were very keen at Reckitt to build strong metrics, both top down in a qual way and bottom up in a quant way, working on farms to do so. And that then means you can start to both measure the impact that has happened, but also evaluate different interventions that you can then put into place, be that on farm, adjacent to farm, in the wider landscape. And, and that old adage within business of what gets measured gets done is really critical. And, when I think about some of the conversations I have with the investor community, once we've identified a financial related, climate or nature related risk, the next question is, so what are you doing to mitigate it? And how are you demonstrating progress? And therefore having robust metrics that sit behind that is really critical. But also, to Richard's point, just get started. Because, I've said a few times in this conversation on nature over the last sort of 6 to 9 months since TNFD guidance launched, it's very easy to get daunted by the scale of this conversation. But think about what are the most material issues, wherever you might be operating in the world, and begin there. Materiality matters. And you can start to make progress, just as we've done on water, on latex, and other natural ingredients that we rely upon. Are there areas that you can use external certification, for example, for the origin of some of those natural raw materials? It may not be the perfect answer, but it's a great start. And I think, aiming for perfection usually means progress doesn't get started. And so making a start, understanding the material issues, considering your reliance and dependency on them, and then beginning to think about metrics and engagement at a local level across that group that Richard beautifully described, to make collective input and make change for a more resilient value chain and nature within it is a critical part of this conversation.
Brilliant. Thank you. Thank you so much, David. Billy, over to you for some reflections, and if there are a couple of things we could do, what would they be before we come to Nicola?
Thanks, Helen. I think those are very interesting conversation. You're having finance and companies and NGOs together. It's exactly, I think, the kind of exchange we need to get there. I agree with Richard and David on the metrics point, and not letting perfect be the enemy of progress. We've seen that in climate. And here I think we can all see that in nature, the number of metrics that you need to actually kind of measure that is much larger, is order of magnitude larger. Climate, you have 3 gases effectively, to worry about, and to some extent where they get emitted in the world, which country or which industry is not a primary consideration. Whereas here with nature, it is much larger number of consideration, much more regional, etc. So if we wait for the metric, we're gonna wait too much. So I think that same, taking a leaf from that climate book of progressing while accepting that we don't have the right data, we don't have the right analytics, but it's still fast progress is needed. I think that's important, and it looks like there's agreement on that. The other couple of things that I wanted to say is maybe bringing it back to kind of the role of finance into the economy. You can see the complexity because we as banks or institutional investors, asset managers, etc., we are holders of portfolios. So across industry, across companies, across geographies. So measuring it for a single company, as David gave us a sense of the task there. But if you do that across an overall portfolio, it gets even bigger. Now, on the positive, I think there's been some momentum in bringing the financing, mobilizing financing to it. You talked about the $700 billion annual which is a very large number, much larger than the current states. There are some capital being mobilized. Our research has published a report recently. They've identified, for example, 40 funds in the public equity market that are dedicated to biodiversity as an investment theme. And there seems to be growing momentum for it, even though the disclosures aren't there yet. TNFD is still being adopted and by the early adopters and so on and so forth. So there are some of the scale of what's coming there is not there. There will be more challenge than climate when it comes to what the role of private funding into this, in particular, given the fact that some of the, let's call it, economic model for them are not established, and maybe we need a bit of innovation there, a bit of de-risking, and so on and so forth. And that's why I was going to conclude by going back to the question you asked earlier, Helen, regarding the outcomes. Yeah, because for us at portfolio level, we may not know exactly how to measure everything, but having a view of what are the outcomes at high level, what is the top 3, top 5 outcomes in each sector, in each activity, and laying that out in a way that's kind of consumable by the corporate and by the financial system. I think that would really help with the level of mobilization around those discussions and around putting the capital to work.
Thank you. Yeah, that's, I know internally well, actually it wasn't internally, we did a public report about calling for just very simply, improve soil health, uplift in biodiversity, using habitat as a model for now until we get to sort of figure out species, like water quality improvement, just these very simple terms that you can sort of start to break down, and actually then, to David's point, come up with activities that deliver on that would at least get us going in the right direction. So now I'm cutting it close for all these questions. So Nicola, I'm going to come to you and love your reflections on what you heard, but I also can see you've been answering some questions in the Q&A. So I don't know if there are any you wanted to pull out and share with everyone. I think if it's recorded, they don't see the answer to those questions. So if there's any particular question you want to verbalise for us here and answers, that would be wonderful.
Thanks, Ellen. Well, a lot of the questions are quite sort of technical questions about the study, so I've been diligently answering those as we've gone along. In particular, lots of questions around, or a couple of questions around, how do we make nature-related risk assessment sort of plug into the standard approaches for climate risk assessment? And I think that's really important. And the response I gave on that is, in the study with GFI, we really worked hard to look at the sort of similar kinds of metrics, similar kind of scenarios, and approaches to what we saw on the climate risk assessment side, including plugging it into a macroeconomic model that's used by the NGFS on climate, so you can do a direct comparison. So we worked hard on that, but I think as well that one of the key findings of the work was that actually the way that we're assessing climate risk at the moment is significantly underestimating the risks. So actually we do need new approaches, and particularly to understand these very sort of compounding global cascading risks, which we identify in the study. Those are as relevant for climate risks as well. So we really do need to think about this sort of systemic level risk. And I think Billy made that point at the beginning, is this, systemic risk versus specific risks, and the need to really understand the link between climate, nature, and these bigger system risks. And why is that important? Because these risks are very difficult to diversify away from. What we show in the study is, these are risks that can impact multiple countries, multiple supply chains, multiple different levels. So actually, we really have to tackle the underpinning driver of this risk, as in environmental degradation, because it's not something that is very easy to just diversify out of. Just a couple of reflections, if I may, and this has been a really great discussion. I think, coming back again to another one of Billy's points at the beginning around, we don't have a sort of IEA scenario that tells us the best way forward on nature that we can sort of map against. And I think that's a key thing that we need to see, including from government, is what does a nature positive transition pathway look like for the UK or for other countries? I think that's something we really need to see. Once we have that, we can start building our transition plans around that, assessing risks along that pathway. And that will, that will, it sounds like a very techie thing, but having that in place will unlock so much progress towards having that. Not having a clear goal like that and a clear pathway makes things much more difficult. I think sort of jumping onto the government side, we've talked a lot about financial sector here, but this is a big risk to the UK itself, to the government, and the government is going to be the insurer of last resort here if they don't manage this risk. This is the big fiscal risk that's sat on the balance sheet of the UK. So every time that we're not fully implementing different regulations, not having the right environmental standards in place, actually it comes back and bites us afterwards in terms of the risk that we face. So there's a real benefit for more action from government to really set in place the right regulation and policy structures in that. And I really agree with Richard's point there, and love many of David's points. It's so difficult though, how can we make every company though engage on all of their supply chains in this way? It's really, really difficult. And I'd love to ask David on another occasion, like how you do that and how do we get others to be doing that is really important. But again, I think there's a role for government here in setting the right enabling environment. And I would, when we looked at recommendations from the report, one of the recommendations that we made was around the transition plans. So lots of firms at the moment are developing transition plans. So put nature into those transition plans as you're doing it, given this connection between climate and nature. So you're thinking about, how do you engage with your clients? Where are the opportunities? How might markets change? How might you need to adapt to those as you're building that transition plan? And I think that's a really important next step for many firms. Thank you.
Thanks, Nicola. It's wonderful. So there's quite a few questions been answered. So David, I'm wondering, I see you've answered a couple. I wondered if you could just sort of share sort of a summary of the question and what your answer was. And then Richard, I have a question for you, and then Billy, I'll come to you, and then I think we'll wrap up.
To be typing frantically, Helen. There's a number. I mean, for me, there's a couple of themes that people have been saying about climate change, TCFD, nature risk, TNFD. For me, linking these two things together is really important, because it creates synergy in some of those solutions and makes certain, therefore, that you get, to put it really bluntly, the best bang for your buck in terms of investing in solutions. How you join them together is a little bit more complex, and I think that's something we have to really get better at. We're very good as a race, in fact, at tackling the problem in front of us, but then we move on to the next one. These are two things that need to be tackled simultaneously. And so somebody asked me about UK projects. Will we see more of this in the UK projects? Yes, I think we will. There are a number around already that join this up, and I was thinking about one in the South Lakes, in the Lake District area, where there's been upland planting, recoppicing of wild moorland, which was cleared many, many years ago, of course. And what that does is it increases biodiversity there. It also holds water upland, and it means downstream flood risks are reduced. And that's a great sort of, synergy of trying to connect things together. I've seen Southwest Water doing things on working with farmers in Exmoor and Dartmoor, thinking about what's the water catchment area, and therefore the use of agri-chemicals up on those upland fells. What does that mean for purification of water for drinking water? And working with farmers to create ways of rewarding them through ecosystem services payments that gives better, simpler water management for them. These things are starting to come together. We've done some of our own in terms of work with WWF and the aquatic ecosystems of Norfolk. We will see more of that, but finding those synergies between the two areas of climate and nature, I think is hugely important throughout.
I'd just throw in the mix, probably I was thinking, adaptation is going to go in there at some point as well, just sort of looking specifically at adaptation. And to your point on the sort of UK projects, we get asked all the time, how do you take the risk and then turn it into investment into projects? And it does feel so CSR led, and sure, to your point and Richard's point on the need for sort of compliance markets and these demand drivers. So on the flood side, it's very hard to find actual buyers of that flood risk because there's no incentive. So Richard, very quickly with you, I just wondered, with all the NGOs that you work with and all the work that you do, are you seeing an increase in the conversations with companies? Is it still at sort of the level of CSR, or are you actually getting into board levels? Yeah.
I think things are just changing. I think things are just beginning to shift, and we're hearing a lot more appetite to talk about what a serious framework of reporting, nature positive planning, and regulated markets might look like, which is really, really welcome. But that driver ultimately needs to come from governments. And Nicola said, if only we had an IEA for nature, that's what the environmental improvement plan should be. We've got some aspects of it in the Environment Act. It talks about the number of hectares that need to be restored. It talks about restoring our protected habitats. It talks about the number of features in marine protected areas. And of course, there's things like 30 by 30 there as well. But that plan at the moment is too ensorcelled round with silly narrative, and it's too hermited up in DEFRA. It needs to become something that's an overarching guide for government, and then you can see it translate down into those decision-making levels. Helen, you mentioned flood risk mitigation. Well, we're still in a world where Environment Agency is expecting so much of that sort of pound invested for number of homes protected calculations. Similarly, with water quality, we're still in a world where Ofwat is still considering first, what it'll do to customer bills rather than what something will do to the state of the catchment. Once you've got that overarching plan described right with proper delivery and accountability, then you start to take a nature first approach to some of these problems. So why is it that only 1% of Ofwat's investment for the next period is in nature-based solutions? It should be completely flipped around. So I think, what am I trying to say? The next government has a chance to set out that kind of IEA vision through a strengthened delivery plan around the environmental improvement plan, feed it through to those public bodies that have responsibility for the day-to-day decision-making, and get on and set out the sort of regulatory framework to drive investment from business that will create some winners on the one hand, and will reveal those risks and free riders on the other hand. And it will take a brave government to do it. And so we need to be holding hands to ask for it, please.
Thank you, Richard. Yeah, it comes back to this sort of nature as our infrastructure, not just here in the UK. I know we're coming out from an angle of UK, but also everywhere. It's and that sort of shift to that conversation. Lee, I was going to come to you, but I see we're at time. So what instead I'm going to do is say thank you to everybody for all the questions you've had here. We'll take them away. We'll probably put some of the answers that have been typed in on the website, where we'll once we sort of edit some of them down, so that everyone can see those if you weren't able and you're listening on a recording. In terms of next steps, I think there's so much we could look at from the analysis. I mean, it just goes, one of my favorite things is how it looks at the value of ecosystem services like nature has on your physical and mental health, which I think is something we all know, but this actually sort of goes a step further. So we will be running a series of more granular webinars today. We really wanted to have like a broad view and sort of show that how it's going to take us all working together across our different sectors. But we hope to have something that focuses specifically on ag and water, and we'll keep everyone posted of those via LinkedIn or on the site. Nicola, anything else from you on next steps that we can share? I'm going to put you on the spot.
Well, I think those deep dives on particular sectors is what we need really in terms of moving forward. So for us as well, a next step is moving from just thinking about the risk to where actually are the positive opportunities to make change. So what would a nature positive transition look like for agriculture in the UK or manufacturing in the UK? And where are the risks associated with that in terms of stranded assets, but where are the big opportunities? And I think that's where we need to take this dialogue next, because that's where we can really get people excited and power people up to seek these and capture these opportunities.
Well, with that then, with 1 minute to spare, I'll just again say thank you all so much to an incredible panel for all your insights and reflections. I really appreciate it. I know how much you're all working behind the scenes on nature. So thank you so much. And thank you to everyone who tuned in, and have a good afternoon.
Thank you.
Thank you.
Thank you.